Hi, did you know that S&P 500 is now breaking out from a bullish wedge? I'm Janne Muta, the Chief Market Analyst for TIOmarkets, and welcome to this price action video. Maybe you want to give us thumbs up if you like what we do, and certainly you should subscribe to the channel. Here are the 10 reasons why. We are hitting the targets fairly often, on weekly basis actually. But even though we have these successes, we don't provide investment advice. So only watch this video if you agree that all the content available is for educational purposes only, and we don't provide any investment advice. So today, this morning at TIOmarkets.com/analysis, we made available this analysis on S&P 500 as the market was breaking out from the bullish formation. Now that the market has moved quite a bit, it makes sense to see if there's still more potential for the upside and where the key levels are. So here's the bullish wedge breakout I was talking about. There was some pretty good PMI data from the US on Friday. This supported the market and we saw some buying coming in. And today we have the market breaking out, and it has already moved quite a bit since the time we published analysis this morning. Let's see what the key levels are. So basically the very first level I can see here is the latest high from the October 29th. And the market has almost moved to this level where we had our first target area. Now, obviously, in order for the market to move higher, it has to keep on making higher lows, and obviously then we are interested in where the key support levels are. Looking at the market, obviously the most important support is at the Friday's low, and in futures, this is a futures chart, in 2-hour time frame, the CFD prices might differ a little bit. The futures low on Friday was 3225. And looking up from here, I think we have another swing low here. So as long as the market keeps on moving higher and doesn't violate these lows on permanent basis, but keeps on moving higher, I don't think there's a big likelihood the market goes all the way down here. I rather expect the market probably to retrace somewhere down here where we have the short period moving average, 10 period moving average. So if the market kind of retraces back to these levels, I expect it to bounce again. But at the same time, we've seen the S&P quite often just keep on pushing higher. So we are looking for long trades above this level where we have the shorter sort of faster moving average, 32.75 in futures. Again, check your CFD prices, CFD charts, so the prices differ obviously depending on your platform. But going up from here, I think the next key level, and we can get some idea on if we take the wedge here and create a projection based on the wedge. And this points to these levels here where the market used to find support. So I think this here is probably going to be a key area. Looking at this high and this high, they're relatively close together, and if we throw the Fibonacci retracement levels into the mix, we can see that the 38.2 is not too far from the projection. The next key levels here, if we go a little higher, I think we should look at this high and the high over here that come close to the 78.6 and 61.8% Fibonacci retracements. The 50% doesn't seem to coincide with any levels, any horizontal levels here, but let's see how if we draw a trend line from here and see, yes, it points to sort of these levels. I think it really crosses this high of 34.10 where we have 61.8 also. So this is all from me now. Thank you and trade safe.